Hi there, and welcome to the weekly market review. We've seen last week we had close to four volatile days, and all of that was wiped out on the Friday. Nifty making another high in the same week once again. So, just reviewing all the indices and giving my thoughts on what I believe is panning out in the broader market. If we see Nifty, it is at all time highs. We did think that going below this it would challenge the daily market structure, but it did not, and immediately has gone above that high. So Nifty, definitely from an index standpoint, bullish. If we go to Bank Nifty, this the scenario is quite different, and like I said, this was the level I had marked in the last video. If you've not seen the last video, you should see the episode 1 where I'm marking out 51,996 as a level, and it has made another high above that and breached that here. Basically, what that puts Bank Nifty into is, on a daily time frame, Bank Nifty has gone into a bearish market structure. Now, one thing that is very important and notable is about the bond market yields, as Nifty is heading higher, but I'll come to that separately. Let's look at Nifty Auto is booming. It is bullish on the daily time frame. There is nothing more to say about Nifty Auto because it is just one sector that is booming along with Nifty. Although something to look for in Nifty Auto is, if you see, the broader sector as such is not going up. Nifty Auto is being taken up because of two or three heavyweight stocks in it, but not to deny that it is on a bullish market structure. If you look at the PSC index, then it has just made this big swing. Its daily market structure is here, and it is trying to head higher to break this high. If you look at a CNX FMCG, without a doubt it's a bullish market structure, so nothing more to say on FMCG. CNX Finance is very similar to Bank Nifty. If we see, this was the low. It has broken the low for the first time. It is coming back up, and if it takes out this newly created low that is here, we will be in a bearish market structure on CNX Finance index as well. So financials and banks look to be weak as compared to Nifty and Auto at this point. CNX MNC, again, similar structure to Nifty. It tried to breach the daily market structure but has bounced back from there. Again, in comparison to Nifty, it is slightly weak but has not broken the structure on the daily time frame. If you look at something like CNX Metals, after making this high, even though Nifty has made a new high, the CNX Metals has started lagging as compared to the broader market. Again, it is bullish, but it is lagging, and it is a underperformer as compared to the Nifty index. CNX Infra along with Nifty has made new highs, so the structure is definitely bullish. If the high comes in here at 9386.65 and the high here at 9378.8, so it's not yet made a new high. As soon as it makes a new high tomorrow or next week, this market structure pivot will shift onto this point, which is at 8832, to see where the structure breaks. CNX Energy again has been in a bullish structure. The market structure low is right now at 36,244, but if this high is newly created, and the market structure will shift somewhere to here at 4316, but that those signs are not yet there. Again, energy is slightly lagging as compared to Nifty and other sectors. CNX Realty continues to be bullish but has been a laggard now for almost a month as compared to the broader indices. So this is in line with what metals is trying to do at this point, or finance and banking are trying to do. PSU banks, again, similar structure to what private banks have or the Bank Nifty has. it has tried to make a new high, and after that it has been quite sluggish on the chart and range bound. So if we see the broad theme here, and I want to try and note that out, is the broad theme here is all the defensive sectors like the FMCG, the pharma are all booming, and the aggressive sectors except Nifty Auto, which is finance, bank Nifty, metals, energy to a certain extent, realty to a certain extent, are all starting to lag as compared to Nifty. So I do see a change, a shift in the market that is happening of the defensive indices are slightly now getting more bullish, whereas the aggressive indices, which we call as also as non-defensive stock or growth stocks, have started to go into that laggard state or range bound state. That does not mean the bullishness has stopped where structures are not broken, but the structure, although it's intact, there is a lot of range boundness into it. The second most important point is that Nifty is heading higher, but is heading higher on deteriorating macroeconomic indicators. There is no sign of macroeconomics coming together with the financial markets. So that's another I see right now in the current markets. The third and the last thing, which I've also spoken in the previous video, is what is happening to the 10-year bond market yields as compared to Nifty. Like I said, if Nifty is heading higher, the bond market yields also should be heading higher. But every time Nifty is making a new high, the bond market yields are dropping lower. So even I think the bond market yields were somewhere at around 6.964% last week, and this week they've closed at 6.939%. So there is a correction in the bond yields, which is suggesting that Nifty is unlikely to make very big sustained moves from here, right? Because we need macroeconomic support, and we also need the bond market yields to also show the same signs, which is not the case at the moment. So it's dicey. The only one high volatility event coming now is the August 8th monetary policy, but apart from that we don't have any big other high volatility events to come up. So keep a watch. Again, I'm trying to say that this is not the time to put large amounts of sums hoping that Nifty will move to 35,000 or something of that sort. I'm happy to be proved wrong, but from the scenarios, the macroeconomics do not support the ongoing growth. The macroeconomics do not support the ongoing growth in the financial markets at this point. Until I see you next time, I wish you good luck and good trading. Bye.